Good morning. He said he's backed off hard. He's got one property. He's slowing down on finishing because the market won't support it. And he's sitting in cash.
Yeah, well, it's a good thing to
Yeah.
be in.
Yeah. So hey, how are y'all?
Hi.
Hey Bill. Hey David. Today is our Friday. Markets closed tomorrow, Good Friday. And also announced that we're not going to have Kerry's Friday call either. So we're all going to take a 3-day weekend and prepare for the coming. Well, we're getting close to May, aren't we?
Yep, we're good
Sell in
there.
May and go away.
Yeah, we're halfway through April. Yeah,
I know.
I think it was sell in March.
Yeah, it
Yeah,
was.
so
All
one
right.
second.
Well, oh yeah. And just as this, no, don't want to do that. Disclaimer: this is not advice or recommendation from anybody on the call. Please do your own due diligence before investing. Mark, you go ahead.
Okay, let's do it. So yesterday was an interesting day. I mean, we already started out, we were talking about how the news cycle's driving everything. Of course, day before, after market close, NVIDIA came out and they talked about taking a $5.5 billion write-off with the tariffs. And so the market started down, and then Powell came on, and we got the Powell flush, and he pretty much said, yeah, we're not going to do anything to help the stock market, which is strange because they've always jumped in and done something to help the stock market, and I guess until this president came in. So that tanked the market further, and you can see what happened. And this was yesterday's heat map. And unless you were a little bit in the energy sector, a couple medical devices, and in aerospace, that's about all where we saw green yesterday. Otherwise, everything just took a dump. So if you jumped in yesterday and trying to catch something, and if you weren't in one of these little areas, uh, you know you probably didn't do very well. So again, be careful. And today, is the markets will be closing today for the week. So if you're trading, I get out if I was in anything, which I'm not, as far as a trade. But to carry over the weekend is weekend risk, and especially with the news cycle that comes out, uh, you never know what's going to happen. And we saw that today with earnings in United Health. United Health came out and their earnings weren't as expected, and their guidance was down, and they're down 20%, which adds to 700 points down on the Dow, and the Dow is down 500 or 600 points right now just because of United Health and that. So I'm brought to the thought of Warren Buffett, and again I go back to him, and he said the stock market is designed to transfer money from the active to the patient. And what he means is people have to be in the market and trying to move all the time. And that's a good way, especially in these type of markets, to lose money as opposed to just sitting and waiting and following your plan. And I can't think of a better thing or advice right now is what's happening. I know it's hard to be patient, but you know, it's your capital, it's your money. You want to jump in and risk that. I certainly don't for me. And I was talking to a friend of mine yesterday, just in the thoughts of the economy, and he said he was talking to one of his friends. He worked at this drug company that's here locally. They make pharmaceuticals. He's been there 45 years. He was going to retire at the end of this year, and he looked at his 401k, and he had about $1 million in there. He says, now I have about 600,000. Okay, because he didn't pay attention to what he was in and what's happening in these markets. So his retirement thoughts have changed, from happy times to I just lost a third of my retirement account. So, and then Jan came home, and she works for a big private company that refurbishes and inspects private aircraft, Learjets, Cessnas, bigger jets. I mean, she's worked on Kid Rock's plane. She's worked on Franklin Graham's plane. She's worked on Jimmy Buffett's plane, really high flyers. And And she came back and said they had a big meeting and everything is slow now. Just no one's coming in to get anything done as far as upgrading their planes other than just FAA inspections now. So when the ultra rich start cutting back, that should be a sign. And that's my recession indicator when she comes home and says, we're slow and we're going to cut hours, that particular company. Uh, then I saw a car ad the other day, and I actually saw them offering like interest rates at around 1% on a car. Remember when there was 0% and all that? So I haven't seen that in a while. And then I was out working in the fields, I had the radio on, and there was a local house building company, and they were offering up to $10,000 in incentives for their homes, which included washer and dryer and refrigerator and all this other stuff. If you come and buy one of their homes. So these are things that we haven't seen in a while. At least I haven't noticed them until recently. So, it really struck me that the gentleman who lost, a third of his retirement right before he's going to retire. And that's why, it's so careful or so important to watch what we're doing with our money. Don't let the market get away from you. And then all he had to do was, look at long-term technicals for me and get out. And I did that with Jan's IRA a couple of months ago. I just switched it all into the money market. And then all our contributions, I just put in stocks because I knew they were going down. So she's going to buy on the way down, and her principal base is still sitting there, and she didn't lose a dime on that. Okay. So I think people need to be more smart and at least take an interest in, why did I do that? Because I saw the technicals, I saw what was happening. We can look at any chart and see that. So I think that's my spiel for that. Let me go look at some charts here for us. So here's the SPY. Okay, you can see what we did yesterday. We're looking to open right here on this line. So when you look at, we're going to open higher, it's really not. When you look at it, we're above the 9, we're right above support. And again, nothing here that interests me to say, I'm gonna jump in today, before a 3-day weekend on this. And if you go look at the weekly, if you're an investor type, on a weekly basis, we talk about the 200-day moving average on the daily, and if it goes below that, on a daily chart you're trading, that's a bearish signal. Well, here's the weekly. On the weekly, okay, this is the 50-week simple moving average. A lot of people will use the 50-week on a weekly chart if they don't want to be trading in and out. You can see even on the weekly chart, we're below the 50-week, which is acting like the 200-day would on a daily chart. So until this crosses back over, on a 50, a lot of people will be staying out of, these indexes. So just be aware. Let's go back to the daily. Okay, let's get it back down. And then we go to the Qs. Same thing, looks at Qs just close right above the 9, right above a support level. Okay, we're just kind of in this sideways pattern. And again, nothing exciting here for me to say, I'm gonna jump in and do anything. And then here is the Dow. The Dow closed right above the 9, but we're still under the 200. This is interesting because we have not, since we've made this high, on this big old candlestick, we have not closed above that since, and that's 5 days ago. So, I mean, that's not showing strength of momentum on any of these charts. NVIDIA. This was the big one yesterday that started it. Oops, where'd we go? Started it all. You can see where NVIDIA is going to open here. It's going to open just a little bit above where we have. Let me move this closer so you guys can see. It'll let me. There we go. So again, this one closed right below the 9-day, and we're just not seeing it. Again, sideways kind of. And again, we have not closed above where we did 5 days ago, and showing no real momentum in here. Meta, I mean, again, Meta is just down, down. Looks like we're going to close right about where we are, open right about where we opened yesterday. But Meta's in kind of a downfall here. And it's just we're just waiting for something. The China thing has not come through. Some of the good things today, pulling everything up except the Dow is, they're talking with Japan and maybe they'll get an agreement with Japan and start these agreements rolling forward, which would be probably a positive for the markets. But everything I'm seeing, it's nothing that would say, man, I really want to grab into this market. We'll look at Bitcoin real quick. Bitcoin again, just kind of cruising along the 50-day. It's above it today. We've got a nice move up on the 9. We're above the 20. Okay, kind of a golden cross of 9 over the 20. It looks like it's going to hit the 50. So we've got a little momentum. We're not seeing it dump as much as one would think. So some of the money might be slipping into Bitcoin like it is to gold still. And let's look at MicroStrategy. So MicroStrategy's been hanging in there too, just kind of hanging along. Here's where it's going to open a little bit higher. And here's your resistance up here. So MicroStrategy's been doing, just hanging in there. We talked about Casey yesterday being a momentum stock. You can see what happened. Our resistance line came in and it's just kind of stopped Casey on the momentum side. So, if you're in that, you'll be aware that you're playing with the intermediate resistance line. One thing that's come back on or off is gold. Some of the gold stocks, the intermediate resistance level went away because you've got this momentum zinging up. Just remember, you're outside of the Bollinger Band, and you don't trade more than 5% normally outside of the upper or lower Bollinger Band. So if you're going to chase in, you might want to wait for it to come inside a little bit. Most professional traders are not going to buy outside of a Bollinger Band, but you're seeing what's happening here in gold again. So money's still going to gold. There's another gold, where the intermediate resistance line has actually gone away. But when you look at gold GLD, you can see that it's still in there, and we'll see if it stays. But again, these all look the same, on these charts. We talked a little bit about, I think Paul was talking about Palantir yesterday, and Palantir still, above the 50. But look, we got intermediate resistance, and as a trade goes, I would be out, when it hits the intermediate resistance level. And again, we talked about, the tide goes out, takes all boats, and just about everything got hit yesterday. And let's look at United Health. We looked at United Health yesterday, and we had some resistance come up. And it's interesting because had you been in United Health and you just followed a trade plan, okay, and you came up and said, okay, resistance is where I want to get out, you would have gotten out, when it touched resistance here, and that would have been at 592.86. And then all of a sudden, you're going sideways. Had you stayed in, here's where we're going to open today, 467.81, okay, on United Health. So charts and technical analysis will help you. Not always, but in most parts, and that would have saved you. I always say get out before earnings anyway, but this is a big dump on United Health. So a lot of people are going to be, losing some money today on United Health, the way it looks. And I think that is about it for me today. I'm not seeing anything. I'm still sitting on Bob's boat with Bob. Some ships are sailing out into the trading and investment world. I'm going to sit on my hands for 3 days and enjoy the weekend and see what happens. A lot of things could happen over the weekend. We could get some trade deals, or we could get more trade war with China. You never know. Minute to minute, day to day, hour to hour. So, just be careful, be cool, and take Warren Buffett's advice. And the stock market's designed to transfer money from the active to the patient, and that's what we're seeing happening, in my opinion. So, Trent, what's your Easter message?
Conviction, belief. Over the last 25 years of my life, I've built knowledge, like everybody. I have sought the golden goose egg of investing, and in the really recent 6 months, I have identified a process that works for me. And yesterday was a day of testing my conviction to my process. And this is I basically trade, and yes, Paul, I trade. Yeah, I trade NVIDIA. I'm one of those kind of people who has to focus on one thing, and I've chosen NVIDIA to be my poster child of how I trade my more traded side of my investments. And yesterday was one of those moments where I made a lot of money buying, I had bought puts 2 days earlier on NVIDIA. And because I had conviction that NVIDIA's stock price would go down because the market's foundational structure was breaking down. I made money midday. I called Mark for some advice. He was out mowing his lawn.
But I came in
And
and I came in and called you back though, didn't I?
you did. And
What did I say when you told me how much you were up?
he said, well, I think you used a couple of words I probably shouldn't say on here. And so I ended up taking my initial investment out of the position. And I felt a whole lot better. And my wife was like, came in and she asked what's going on. I had told her about what was happening with the video over the last 24 hours. And she said something to the effect of, why didn't you just cash out when you were over your goal? And I said, I just still believe I have further to go. That's when Mark called and he advised, take your principal out, take out what your initial investment is out. So I did. But going back and looking at the chart of NVIDIA, and this is NVIDIA's weekly chart, and I use the 15, the 62, and the 200 as part of how I make my decisions. And when I look at this, I still have conviction that NVIDIA has further to go, has further to go. And
Down, right?
what happened was I started to think, why do you believe this? And it was is based on my process. And Mark has been a big influence when it comes to building a process for me. And I still look at this. I look at the RSI down here since what is that, March? Wow, since March of 24, it has lost relative strength and continues to lose relative strength. Why would I question that? The interest in NVIDIA is thinking it's going to go higher is waning. I look at my 15-week moving average, my 62. These are two lines in the sand for me. We've come up to it again, the 62 this week, and we're pulling back again. It looks like there's support here in that 80 range. We tested it before, we bounced back. We're sort of in this downward trend. Conviction. I still look at this and I go, Monday morning, I will buy probably more put contracts going out into May on this because I believe NVIDIA is probably headed to the $50 range. Oh, by the time this is all over. And I thought about this and I was like, this is sort of like my belief in God. I believe that he is there. I'm here for a purpose. Continue that belief system into my process in investing. And I think this is one of those things as investors we have to have, especially in these times, conviction, commitment to our process, and willingness and humbleness to say when I'm wrong and when to not be a pig. And I had my wife write me a note, and I taped it on my computer last night, and that was, don't be a effing pig. Take your profits when you got them, especially when you've got big ones. So overall, my message as we enter the final day of this week is, if you do not have a investment process, be it short-term or long-term, build one. It's going to make you money in the long run, and be humble enough to make adjustments when you know you're wrong to that process. So that's my message on this final day of the week. Well, let's open it up to the floor and
You said
hear what people have
50?
to say.
50?
What's that?
You said 50? Your
Yeah, I think
conviction is
I think the
50?
video by the end of it will be in right around that $50 range.
And what time frame?
I by beginning of fourth quarter.
So okay, so you're gonna take strikes out to fourth quarter. I see.
Yeah. So I'm
I don't think so.
typically. What's that?
I don't think so.
What, my time frame or my price target?
Yeah, your time frame. The
When do you
time
think
frame's
it'll
too far
happen?
out, and your price target, I think, I don't see 50. You
Where do
know,
you see it?
Well,
I don't see it less than 70.
Okay. Either way,
I mean, 70 to me is a reach. He's in China now, trying to
yeah, I
patch
saw
things
that.
up. So, but then again, I mean, he has a substantial amount of revenue that comes from China.
Yeah, what, 10 to 15%?
Yeah,
how did you technically get to 50? I mean, from
Look at your 200-week moving average.
I know, but can you show me how you made it to, I mean, that's how you're doing it? Like, look at the 200?
Look at your chart,
looking
and
at-
look to your left. Look to your left and look to your left. Pretty simple.
Yeah, I guess my concern is that TSM blew it out of the water. TSM provides, NVIDIA's a big customer.
yeah, but
Here's
you're gonna get
Mark,
hit with
here's
it
what I'm
also.
Here's what I'm
Alright,
looking
yeah.
at is
Okay.
the fact that Bob's got to get all of his product out of China by May 22nd. I'm
Bob.
looking at market
Oh, Bob.
structure. I'm looking at the fact
Not
that
only
we've got
just
to
me,
refinance.
it's everybody.
We've
It's
got to
everybody.
refinance $4.6 trillion this quarter. That has to happen. It's not about NVIDIA, the stock. It is about the foundation of our house. I'm sitting on the second floor. I'm looking at my child's bedroom, and I'm wondering why one side is lower than the other. It's not the bedroom. It's the basement, and the basement is weak and crumbling, and that is what I'm looking at. If the foundation, global foundation, economic foundation of the global economy continues to be strained like it is, we will see all boats will go down. NVIDIA being the number one, number two market cap stock in the S&P 500, the NASDAQ, it will be the leader in the way down. And that's what I'm looking at. The company, fundamentally, what it does and creates, I have no problem with. I think it's a A+ stock, but it is the foundation I'm looking at.
Hey, Mark,
And
what do you think of that trade, Mark?
What do you mean?
Target NVIDIA hit
Well,
50.
my low target would be a little higher. Mine would be higher than Bob's. Mine would be about 80 on the low side. Going out, I think right now I'm seeing some nibbles at about 101.30, and then after that it would drop to about 91, and then it would drop to 80 after that.
The last time it was
but-
at 50 was in 24, I think, right? January 24.
Yeah.
Okay. I'm just,
He's looking.
I
You're
hope-
using the
I
weekly
hope I'm
chart.
wrong.
You're using the weekly chart though, right? I mean, aren't you
Yeah.
using the weekly?
Yeah,
Let's
I'm using a weekly chart.
so yeah, here's 50 is right here. So that would be about when everything started. That would be January of 24. Right in this area. Yeah.
Yep.
And that's
yeah, what do you think of that?
well, I think there's lines. I mean, he's saying that's the absolute bottom. So there are other levels of support and resistance, within the chart. And I think, like I said, I think 80 would be my low at this point, right here. Okay, and I think 91 would be my second, coming down. So, if you look at how things move, okay, and just I'll do this real quick. I mean, look how this is the S&P. We go up, and then we consolidate, then we go up, then we consolidate, then we go up, then we consolidate, then we go down. It's always kind of like it goes and it takes a breather, you know? You can see it in all the charts. But in this case, where we have been today, we really haven't, except for a little bit in here, haven't had this consolidation where you just draw a box around it and say, okay, we're moving sideways. We're kind of all over the place. So do I think it's 50? I think that's low, but is it possible? Well, yeah, you've seen it down here before. I mean, but I don't know. I don't follow it that much, but anything's possible, Paul. But is it probable? I don't know.
Yeah, I think what I'm
That's-
saying is the
that's-
technicals don't show that. The
Well,
technicals do not show that. You know, come on.
mine show 80 as the low right now.
Yeah, if I
But-
said something like that, you'd be all over me.
But
Yeah,
that's
you'd be
that's
all
on a-
over me
that-
if I'm right. If
That's on a-
I'm right, then it's a great buying opportunity.
But you're on the
If you get
weekly
in the
chart.
60s or 70s, it's probably a good buying opportunity.
Are you on the
I-
weekly chart though?
Yeah, I am.
Oh, okay. Well, let me throw the weekly chart up and let's take a look at
Yeah.
what you're looking at here.
Not recommendation.
Now recommendations, right? So this is the weekly chart. Oh, let me put NVIDIA up so we get
I
the
mean, I
right
think the
line.
market would have to crash. I mean, not, you know, would have to major correction. Because it's gonna ride with.
So here's what you're saying right here. Here's the 200 week
Yeah.
moving average. That's about 55 right now.
Right.
So 50 would get us again right back to January of 2024
Oh,
even on the
yeah.
weekly.
Yeah.
Hey.
Whoa, that's some having fun in bed there or something.
For those of us who dabble in options just a little bit less than you guys do, it's really nice to hear how you're playing some of these option calls. It's helpful for us. It kind of gives us a guidance and it makes us decide whether we want to try it or not.
Yeah.
I know
So
you're not
what's-
recommending it, but it's good to hear what you guys are doing.
What I've noticed is the implied volatility, which is you think of options as you buy insurance on your home, and you have a home that say it's worth $100,000, and you live in an area like I do, which is a 5-minute walk from where a hurricane will roll up, so 5 minutes from the beach, right? And so I'm going to pay a higher premium, which would be the implied volatility of an option for my homeowner's insurance versus, say, somebody in, God, I'm trying to figure out a place where there isn't a hurricane or a tornado. Say somebody in Connecticut who doesn't get hit by odd storms or stuff like that. So their implied volatility would be much lower. That's what causes the premium to go up. And what I'm seeing in like NVIDIA's put premiums, they're actually not all that bad. So what that's telling me is I'm buying a reasonably priced put contract, typically two weeks out at a minimum, because I want time frame to have this exercise. And so the premiums aren't really juicy, which tells me the buy the dippers, the retail investor, is still in the mode of buying the dips. Well, the retail investor is majority of the time wrong. And so I'm buying these put contracts at a cheaper price versus what, if I'm right, the premiums will skyrocket or implied volatility will skyrocket in value and causing those premiums to actually escalate. And that's what I'm looking at when I'm looking at projections. I'm then using my process, as I explained here, to couple that. But like yesterday, earlier in the week, I bought 20 contracts on the 100 April 25th put contracts on NVIDIA. I'm up in them substantially. I took my principal off the table yesterday. I will probably exit them today because my note says don't be a effing pig, because I don't know what's going to happen over the weekend. But my overall thesis is that NVIDIA not because NVIDIA, but because of the market structure and because of the geopolitical environment we're in, could drive NVIDIA into the low as the 200-week moving average. And so I will next week look for going out, say 2 weeks at a minimum, maybe 4 weeks, and looking for put contracts as close to the money as I can that is affordable for me, and start building a position again in that. And so you get an enormous amount of leverage out of options. It can work in your favor, but also can work against you very quickly. So just be very careful, study it, paper trade it. I know with my Schwab account, I can set up a paper trade account, but understand the mechanics of how options are priced and what they are actually telling you about the overall market. What I'm seeing is that this market isn't convinced it's going lower. And it's the retail investor who over the last 2 to 3 years has been used to, or it's been ingrained, if the stock market goes down or a stock goes down 5%, you buy the dip. And that's what we're seeing right now, is they buy the dippers. Whereas the institutional side is been slowly getting out of this market because they see down the road what could be coming. And in my opinion, that's a freight train, and where the retail investor is sitting on the tracks thinking, there's no freight train. I can't see that. So just be careful. And that's how I'm using options to play this with my thesis. So
On the word of
hopefully
being
that helps.
cautious, don't trade options on margin. It's double the win,
Absolutely.
double the loss.
Totally agree.
You will get your face ripped off. Yes.
Yeah.
And honestly, you shouldn't be trading on margin, period. You have to have margin to short a stock, but overall, just play with your own money, your own cash. At the end of the day, you don't want to call from the trade desk saying, hey, we're liquidating everything and we would like the keys to your house.
That's at 2
we
o'clock,
don't want-
2:30 liquidation.
Yeah.
It could
Yeah.
make
What was
you go
interesting
bankrupt.
yesterday.
Yeah.
Yeah. Well, a lot of people did and have. One thing I noticed yesterday was I jumped on X about 2 o'clock Central Time, which markets closed at 3 o'clock our time. And there was a bid at right around $100 a share, 1.2 million share bid, limit order at 1.2 million shares. And right around 2:30, half an hour before the market closed, NVIDIA made a turn and recovered, I think, 1.33% of its downward. It was down at one point just over 10% for the day. It recovered basically 1.35% of that in a matter of half an hour. And what I recognized was somebody knew something the prior day, and they took a big short position, and they were covering their shorts at the end of the day. And I think that's Mike talks about the end of the day flows and what option markets, but also stocks are doing. So I'm looking at, as we come into the end of the day today, Thursday being the last day of the week, and option expiration for today's options. I would not be surprised if volatility heats up around an hour before market closes, and closer in at a half an hour before market closes. So just be aware we could see the volatility really ramp up into the close today as we go into a 3-day weekend.
Hey, Trent,
Yes, sir.
why don't you show them the option chains on SPY going out and middle April, which is what, the 17th, I think, or which is today. How much a
Yeah.
SPY option is at 500, say, and then the next month and through June. I'm still asleep, so excuse me.
I don't have my brokerage account up where I have that. So
What it'll show you is that each month out at a certain price, the price of that one contract or one share of that contract is trading in over 10 bucks. And
Let
if
me
you
see if I
keep
can pull
going
it up on
out,
Yahoo.
that's what these technical analysis are looking at and they're trading on. The institutions are putting these options out there long term. That gives you a sense of what they expect to happen within the market, reflecting in the terms that Trent's using of volatility. So that's the plays that are out there. The more volatility around the price, or the higher the price, is showing you that there's an extreme amount of volatility. And the probability of that hitting is that much higher with a higher price. Now, Trent does it within a short frame, a trader frame, 2 weeks, protecting his book per se. A lot of these institutions are trading out months. On SPY, you can trade it out, I think, up to 2 years.
Yeah.
And if you look at some of the positions that are out there for a year from now, they're lower than what the SPY is trading now.
Let me see. I'm trying to pull it up on Yahoo Finance real quick. See if we pull it up
You know,
here.
the options can get pretty complicated. It'd be nice just to see what kind of trade you're thinking of making personally, just to keep it simple.
Do you
Now,
trade regular stocks?
I
Do
trade
I?
regular stocks, but options, I've lost money on options so much because I just don't know when to get out. I keep thinking it's going to go higher and higher, and then I end up losing it.
You're buying
So-
calls?
Yeah, calls and puts. Trent has had a nice video a couple months ago about how when the prices are going down, what do you call it? The sellers of the options have to cover their calls and they have to sell by Friday or something. And anyway, it made a lot of sense to me why certain days are more important to get out of options than other days.
Sounds like another level of complexity. You
Yeah,
know,
Well,
yes.
Just puts
it's
and
more,
calls
but
are
it's,
one level. And then you go up to the next level when you start doing diagonals and spreads, and
yeah.
it can get extremely complex.
it can get rocket science.
A lot of it
Yeah.
is.
Yeah.
Give you an
Mike-
example. If you want to buy a Chinese stock on the New York Stock Exchange, you're not buying shares in the company because you're not allowed to. You're buying a synthetic.
ADR.
Correct.
What are they doing? They're creating a bunch of options together to move in to reflect the price.
Oh, wow.
And this is when you, again, this is once you get out of the retail world, it gets sophisticated to the point where you're like, what the fuck is going on?
Yeah.
Head will spin.
Yeah.
Mike, unfortunately, Yahoo Finance doesn't put up a pricing.
Well, maybe next week
On-
that's something we can show them, Trent.
Okay.
You know, if we
That's
have
a
it up
great
and
idea.
ready, but that shows you the progression and what the market thinks of the volatility. If you can get into your own option chains, just check out
Yeah.
spot. Check out that, or check out the diamonds, the DIA, which is the Dow Jones. Just look at how much the prices are at, if you take at the money, which means if it's trading at $10 and you want to buy an option at $10, that's at the money. Look at that going out 3 months, 6 months, and that will indicate what the institutions and the big time players are thinking. When Trent talks about GEX and gamma rates, it's all the option world in there. But then again, that acts as a resistance point. But we saw this week, was it this week or last week, that it blew through that level like it was butter. It's like having a limit on your order and it goes by so fast, it doesn't get executed.
Right.
Same
And
thing.
that's a change. You see a lot of people put in limit orders the night before market opens, and the next day it opens below that limit order and never gets executed.
No.
And
Wait
Um,
till these people at United Health look at their account today.
Oof.
oh yeah,
But that's an
So-
indicator across the board of how fast that dropped.
Yep.
How fast was that drop, people? That's how fast you can lose your shirt.
Yeah.
One bad news, one tick, and why do you think they build these data centers that are right next to the exchange pipes? So that they can be there well before you. If you're looking at a 1 minute chart, you're a minute and a millisecond behind.
So I'll give you an idea. The on the SPYs, the April 25th, 525 is the strike price. The puts, like yesterday closed out, with a bid of $9.05 and an ask of 916. There were, open interest was about 54,000. If I go out to September 19th on the same strike price of 525, the bid is $29.31 and the ask is $29.61. Open interest is 16,554. So people are willing to go out that far and pay that basically a $20 premium per share, because they think in that time frame, SPY will go through 525.
Hi. Hi.
Right. So you can use options as an indicator of what the market is actually thinking about a position, where it would be, or where a stock would be or index would be, and it can give you a barometer, especially, as Mike has pointed out, using the the S&P 500 SPY as your sort of benchmark. It can give you a direction of where this market or markets are thinking stocks will go overall. So
Give you an example. I bought some puts this week for June, on the SPY 410. That's an extreme outlier, looking at the charts. Approximate cost was around 280. If you go up 50 points from there, the options were like $7 a piece or $7 per share. So add 2 zeros to that. 700 for one contract. But as the price gets closer to that, that value goes up because the probability is going up. You're trading probability statistics. Okay. So if it passes that price, that's when you really make money
right.
in a put contract.
You get, if you're like short-term trading options, buying at or in the money, you get more price movement out of it because it's what they refer to as its delta is the price for which if Nvidia, let's just use a stock and it's $10, and the delta on that option at the money or out of the money, meaning it's let's say you're buying a call contract and then you're buying an option at 15, the delta may be 0.25 hypothetically, right? So if that $10 stock goes to 11, that option price is going to go up 25 cents. Okay. Whereas if you buy at the money and the delta is closer to a 1-to-1 ratio, if the stock goes to 11, it's going to say it has a delta of 90. Your theoretically, your option price will go up 90 cents. So if you're looking at like a short-term trading strategy on options, buying as close to the money as possible, where the strike price and stock price are, you get more price movement. You get to use that leverage. Whereas if you buy outside the money, further out, your delta is much lower. You're not going to get as much oomph in it as well. So just take that into account. I try to buy at the money because I get that immediate move in the option. I can use that leverage the option provides. So, but just be very careful because it can We always think in up manners or price increase. We often don't think in price decrease. As fast as it can go up, it can go down as well. So,
And understand that trend's talking about a very short-term trade within a short window of 2 weeks, because the option's only valid for 2 weeks. You have a time factor there, where I'm talking an option going out 3 months. So I see something in the charting that tells me the price is going to go down, and I'm taking the economics and the macro and saying, hey, there's instability. What happens if X happens? There's still the possibility of another yen decable out there. The global markets are being stressed. It's not the stock market that we're trading in here. It's the Japanese market and their bond market. It's the Euro bond market. It's these hedge funds that are dealing on the credit side. When they get their margin call because their swap trade went against them, they're selling equity. And that's what you're seeing, is that instability within the marketplace being reflected in the stock market and the direction that the stock market goes. Think of the stock market as a piggy bank for these huge institutions that dwarf any of us combined. They're playing a different game.
A lot faster too.
And that's, yeah.
and they're using machines to do it. Which, if you look at I look at some the volume, able to pull up all the option, trades for the day. And when you see SPY trading 300,000 to 400,000 contracts, if we're on a daily basis, that's pretty average. When you see them go higher, that's when you know something really is unstable. So it's a fascinating tool that you can use for your stock trading and give you better insight to how the market is looking at a index or a stock price or overall thing. So definitely, if you can, take a little gander into it. There's a number of YouTube videos where they explain the basics. A guy that I follow is Kem Kerson, Cemkrsen. At one time, he was the largest options market maker on the CBOE. He is very knowledgeable and has some really great educational videos. And so I'll post that up on the Discord today, so you can check out his channel. He is like, I look at him as he's the golden child of option markets. He's just so knowledgeable about them, but his education is really top notch. So
It's a
what else,
different
anybody's-
mindset trading options than it is trading equity.
Sir?
I said it's a different animal trading options than equity.
Yes,
Hey, Trent.
I would. Yes, sir.
Yeah, I wanted to put something out there this morning. So what's been on my mind this week is I'm in a mode where I'm more trying to eyeball what the catalysts are going to be. I personally don't feel like they're going to just tank our entire economy. And the Fed has achieved their goal, right? I mean, when Bob is saying he's seeing signs of layoffs, we all know that the economy is either in a recession or on the verge of a recession. And it behooves me, I just can't understand it. This is the perfect time for them to lower interest rates. And quite honestly, they raised them enough that we have lots of playroom, right? So, and they actually lowered them just before election time, right? I think in September they lowered them a little bit, and
By
at that point,
by 50 basis points.
yeah, and at that time, inflation was at 3%, and right now we're at 2.4, and may report even better numbers.
Well,
So
that
it
fight
does.
started.
Yeah, it does seem to be political, but I think Powell is misreading, or I'm sure he's smarter than this. I think it's political, but um, tariff inflation is not the same inflation that they were fighting with these interest rate hikes. The inflation they were fighting with the interest rate hikes was the economy was soaring, right? It was on fire, and he even said it. When Powell started raising interest rates, he said we need more pain, and when we start seeing pain, we will lower interest rates. Well, I mean, all the indicators, the pain is there, and you can't say, oh, the tariffs are going to create inflation. They are, but that's not the kind of inflation that interest rates should be battling.
Yeah.
It has nothing to do with the health of our economy. It's a longer term effect, and it's not what's going on here. In fact, he should be doing totally opposite.
Yep.
Right now is the time to light our economy on fire, make borrowing easier for business owners to start creating these new jobs. If it happens, right? If the long-term goal is to bring more industry into this country, then the Fed should be, getting on board, lowering interest rates, and let's get our economy back on fire, right? So I wanted to ask you guys' opinion on that, because Powell's meeting yesterday, I didn't see where, he just kept talking about tariff inflation, but I didn't see him say we're not. I saw more, we don't know what we're going to do. I didn't see we're not going to lower rates, right?
I saw he's not going to lower rates. They're not going to do anything right now.
He's not gonna have a job much longer.
Exactly,
true.
Mike.
That's true.
I'm with you, Mike. The word was
Underst-
put out already.
Yeah.
Yeah, I think so.
Understand that Powell is probably the worst Fed chairman I've ever heard speak. The Fed does not have any tools in their quiver. The only thing they have is QE2, which is inflationary because you're flooding the market with more liquidity per se, and interest rates. This guy is a true post-Keynesian, which means pump the economy, pump the economy, pump the economy with more debt, more debt, more debt, more debt. That is self-defeating.
Right. My biggest fear is not what the Fed or what tariffs will do, but it's more of the unknown guy or company who has utilized the availability of cheap money, leveraging up their books of business, hedge funds, institutions, individuals, and utilizing the stock market, as their tool, and leveraging up. The rumor was Japan had a fund that was 60-to-1 leverage ratio. That is my fear. Going back to the great financial crisis, that was rampant amongst institutions, all the way down to the individual who borrowed money to buy 5 homes, and with no money down. That is more of my concern, because we are on a leverage ratio, percentage versus 2007, 2009 period of time. We're probably 10 to 15 times more leveraged up. And especially in the last 4 years, the past administration leveraged us up, I think, 40% on M2 money supply. That is really my basis of concern, is who's right now scrambling right now, that they've been up for 7 days straight. They're high on coffee and caffeine, trying to figure out how they unwind these leveraged books of business. And they're just praying they can get out of their treasury trade or their currency swap trade or whatever it is. That to me is the ultimate concern. It's not what Powell, Powell is a headline in my opinion. The tariffs are a headline. It's this underneath foundation that is liquefying and actually lack of liquidity, that is my fear at this point. And really drives my thesis of where things are headed.
It's the lack of liquidity in the treasury market. Okay, there's a lot of treasury bills and notes and bonds that are sitting out there that are sitting collecting dust on certain people's balance sheet. And when they pull them off to sell, there might not be demand for them. When they talk about
Right.
treasuries, it's all about the short term because they're quick, they can turn over and what have you. That's the problem of liquidity, that you don't have enough marketable securities per se. There's no demand for certain tranches of the treasuries. The
So,
assumption is you say treasury and it's liquid. Well, the answer is no.
so if we saw a bounce from, say, the two main catalysts right now, China, let's say, they start dealing and things start looking favorable on the China trade deal, and or which they've said they may lower them in June. So if we get either one of those catalysts, are you guys thinking that would just be a dead cat bounce, and that the system is so broken right now that we're going to continue to have these problems?
In the short term, yeah. You're changing the fundament. Trump has changed the fundamentals.
Yeah.
Well, the
I-
cash cow has been the government spending that's
Yep.
kept our GDP up, and that's all come to an end, pretty
And al-
much.
And also the unemployment rates and what
Exactly.
have you. And they've
Yep.
been playing with those numbers too. Time and again, they have to reissue the numbers months later. Well, what's that tell you? You can't trust anything they tell you.
So
When
here's
they
a,
redid that,
here's
Mike,
a
when they
good-
redid that 800,000, they readjusted it. I'm like, okay, then
It was
no one
under.
makes that big of a mistake.
Yeah,
Well,
it
you
was,
know,
it was under
everybody-
800,000. It was negative 800,000.
Yeah, that's what I mean. When they adjusted it, I'm like, okay.
But everybody that I'm talking to, I had UPS sales in here the other day, and their sales guy told me they took away their incentives, their bonus incentives for doing higher sales.
Yep.
Okay, not only that, but a lot of their divisions are laying off drivers now and package handlers in the warehouses because they don't have enough packages.
Yep.
So I keep an eye on UPS. It seems that they're making some drastic moves to lower their costs and
Yeah.
their overhead.
Here's something to
Packages
think
are
about.
not-
Go
so-
to Walmart and Target every week. Just go on, like, say, Wednesday and go look at their shelves and see if the shelves, what's on the shelves it's declining. Are we seeing less product
That's-
on it? That's something I'm using as
That's a function
project.
of China issues coming.
Right.
But what I wanted to finish with you is that
Sorry.
in addition to UPS and these other factories shutting down and compressing, is 3PL. They are shrinking their footage in warehouses. The demand was so high, you couldn't get a warehouse in New Jersey. It was crazy. We went from $8.50 a square foot to $17, but now that's coming down. And what's happening is 3PL is shrinking their footprint in these warehouses because they can't carry it because the demand is down for goods coming in. The consumer has stopped buying. So if they had 100,000 square feet, they're giving away, they're trying to sub rent 50,000 square feet of that 100.
I remember what Bob is telling you is looking down the supply chain at the micro, which is affecting the macro.
That's right.
Bob's business is 9 to 12 months ahead of what you get
right.
today in the macro.
You got it, Mike.
His supplier or his warehouse scenario that he's talking about is 6 months ahead of him. So that's 18 months out there. And generally speaking, any economic policy takes approximately 18 months to cycle through the economy. Now, all the past year, or 2 years, they've been saying the economy is great, the economy is great, but Bob's saying, no, it's not.
No, it's not.
No, it's not. And everybody's going to be screaming, it's Trump, it's Trump, it's the tariffs, it's the tariffs. It has nothing to do with it, people. It has to do with the economy
That's right.
underlying is weak.
Yep.
There are problems underneath the surface. You are nothing more than the outer layer of your skin that's got an itch.
That's
Your
unique.
bones are brittle.
So it's
Alright.
deeper, it's
Yeah.
deeper than everybody thinks here.
You know,
And we've been talking this for months and months. You know, this isn't new that the economy and the reports are wanky. You know, they're just.
Wanky, love it.
I mean, they are. I mean, and every time we would have our Friday, Zoom calls, I'd go over everything. Like, this doesn't make sense. We knew it that it was all put together, smoke and mirrors, a lot of this stuff. And like Mike says, it's come home to roost. And like I started out with, Jan's company, they do high-end jets. They refurbish high-end jets for the rich. And she said the orders have just stopped. So they're bringing them in for the FAA inspections, but they're not getting them all redone, not the interiors and all that anymore. And they have net jets. They have a lot of the corporate, the rental planes too, as contracts, and they're just coming in for maintenance. That's it. No upgrades.
Everybody's tightening the belt.
And I know when that happens on the upper end, when her company does that, I know that there's trouble coming.
Yeah.
Yeah, that's a direct indicator of what I was saying about Bob and the warehousing that he's talking about. And you can spin that out further into, your labor markets. What's happening with companies? Are people laying people off? And then you look at the earnings. What are they telling you? We don't want to give you any guidance. Why not? Because they know something's up. When the big banks won't tell you that stuff, there's red flags. You have people out there that can't pay their mortgage. You've got people out there that are relying on credit card debt.
That was JP Morgan's. They wouldn't tell the analysts how bad their projection is for defaults.
You know why? Look what United Health did do guidance, and look what happened to them today.
Yep.
Mhm. Yeah.
Yep. And why
He
are they
said
making-
that, hey, actually Jamie Dimon on the call, I listened to that call, and he said that they're not going to give guidance. A lot of companies are going to bow out. That's what I see. It's going to be pretty bad this next quarter.
Yep. All you need is one news story to kick it off.
Some companies are given two guidances.
Yeah.
And that's scary
Good and
when they
bad?
get two. Which do you believe? Heads or tails?
Yeah. So how are you supposed to work with that, Paul?
I think what they're doing is, like Troy had said, if something catalyst makes this market turn, that's what they're projecting it, how well if things get a bit better. And the other one is, shitstorm. I don't deal with it. It's tough to deal with.
Troy, in reference to you saying about Powell said there would be pain. That's what he had originally said. He never said that he would change direction if he sees pain. They know that they dished out pain. But in addition to that, to answer your other question, they're not going to lend. Banks are not lending you money unless you don't need the money.
Yep.
Yeah. Isn't that weird?
Yeah, it's funny how that works.
They'll give you all the money as long as you don't need it.
Remember, guys, Powell is behind the curve. He's talking about what Bob was talking about a year ago with his business. That's where Powell's mind is. The Fed is always behind the curve. They couldn't get out of a wet paper bag if the directions were stenciled on the inside. I'll give you an idea. A good friend of mine worked for the Fed in 2008. She had a heart attack because of all the bullshit that they were running around and doing. And as I spoke to her,
cover up.
You exactly. The top of the Fed had no fucking clue what they were doing.
Yeah.
It's a
I think
facade, people.
I go back to yesterday, and 6 months ago, Powell said, I don't see stagflation. And I remember in our meeting, I said, I do. I see it on the edge. And then yesterday he's like, oh, we could have stagflation. I'm like, hello, you know.
Well, one thing right off the bat, when Powell says that tariffs are inflationary, it shows his idiocy. They're not. They're not a reoccurring thing that is a variable. They are a micro of the cost. It's a one-time change in cost. I posted something yesterday. It showed the effect on certain items. It's not that big of a deal.
The way I look at it, Mike, is, you know, you're seeing it in the press and all over that, you know, it's like all the gates broke loose because we're talking tariffs or we're having it. I look at my life, nothing's changed in my life, you know?
Yeah, exactly.
Yeah, I mean, I'm seeing the same stuff. I'm actually gas prices have gone down and you know, so the tariffs only affect me if I actually have to go buy something. That
Right.
when I look at your list, I don't have to buy any
But
of
we're
that
not
stuff,
buying anything right now.
except children's books. I'm going to buy
Yeah.
some for Trent because those are zero in tariffs.
Well, the school systems are buying them, but those are books that shouldn't be there anyway, so.
Yeah, I guess I just was fighting. I'm kind of fighting FOMO, you know, when you see that a couple weeks ago when the damn market jumped 12% in 20 minutes. If we do get a catalyst, it's that is a meaningful catalyst. It seems like it's really going to happen fast, and
Yeah, but how
I'm
long
getting a
is it
little
gonna
FOMO.
last for there, Troy? That's the question. Is it gonna be a day? Is it gonna be a week? And then everybody's gonna take the profits and run again?
I think
If
it's
you
only a
have that
day,
fear
Mike.
out there, that's
I
what they're
think-
gonna do. It's gonna
Yep.
drive up and they're gonna take the profits and come out. Look at
Yeah.
the price I was talking about earlier, where it went up, what, 12% or 9% in 8 minutes, 10 minutes? How long did it take for them to wind out of that? It was
Yep.
under 2 hours. It was done. You were back to where you started.
Yeah. But
People-
this was our big candle here, Mike, and we haven't hit that high yet in 5 days, 6
Yeah.
days. You know, this is our high. You know, and this was liquidity. We talked about it. Mike hit it right on the head. All this stuff in here, these huge candles, and we still haven't hit the high again. In fact, our trending is down.
And you got what? 4 down candles there? That's
Yeah,
you got
it's four
the
right
you
there.
got the
Yeah.
cross. So in the short term, that cross is telling you over the next 3 months it's gonna be a rough patch. So the
Yeah,
market's gonna trade sideways.
Aggressive death.
It's gonna trade sideways and in short bands.
I mean, I look at this chart, and if you're buying the dip all the way, you know, since we started this back in
You loser.
February, you bought it, then you're like, oh, good, look, I did okay. Then, zoop, okay. It's just the market structure is not there yet. It's all over the place. And it goes back to Mike hits it on the head. It's liquidity. You look at this. This is unusual. This candle here is very unusual. That was historic.
Yep.
And you're right, Troy. We could have another day, and you say China. You know, on Sunday they have a preliminary deal with the U.S. We could see that same candle on Monday. But then what's going to happen the day after that?
I think one of the things I was listening to a Mike Taylor podcast, you can find him on X, and he was talking about, and Mark has brought this up numerous times, the job numbers.
Yep.
And we haven't seen those yet. And I think going forward, the job numbers are going to potentially be another catalyst to light this thing on fire.
Yeah, especially if they're
The
accurate
numbers are lies.
Well, not now you have a change in the administration. So are they going to be lies going forward? One way or another, they're going to be bad. How many people are getting tossed out of the federal bloated government? They're all going to go on to the unemployment numbers. And besides, the unemployment numbers are bullshit anyway. You
Yeah.
become structurally unemployed after 18 months of looking for a job. That means they don't count you anymore.
Yeah, there's
How
millions
good
of
is
people
that?
they don't count. Yeah, you're right.
Yeah, how good is that? It's a facade.
And if you have 3 jobs, like 3 part-time jobs, they count that as 3 jobs.
Yep.
Yeah.
Well, that's changing because the ones that are working from home are being told to go to the office. Now they have to give up their second and third job.
All right,
After
guys,
Social Security.
Yep. Thanks y'all. Thank y'all for going over on the meeting. I appreciate that.
yeah, absolutely.
Trent,
Absolutely.
maybe we could do like a special session, go over this long-term charting and things like that, showing more on the macro, on the longer term macro,
Yeah,
tying in some of those little details for everybody. I mean,
I think that's a great idea.
we all focus on the short term here, and you got to take a step back. And as I said earlier, look to the left on the chart. Go out,
Yeah,
go out, go out, and then try matching up news when you see spikes up or down. What happened? Was there news? Something came out. What was it?
right.
That gives
I
you
think it's a great idea.
that gives you a better indication of how the markets move and what makes them move.
Yep. Sounds good. All right. Thank you, Mike. Thank you, Bob. Thank
Yeah,
you,
thanks,
Paul. Thank you,
everybody.
everybody.
Yeah.
Have a
We
have a
really
great 3-day
appreciate it.
weekend.
Yeah.
Yeah,
We'll see you all
absolutely.
on Monday morning, right?
Yeah.
Yes, sir. All
Bright and
right.
early.
Sure.
Y'all have a good weekend.
Be good.
See ya.
Bye.
Live out.